Good morning to the sponsored breakfast by Surge Battery Metals. We're glad you all got up early, and a special welcome to everyone watching online streaming. Welcome to the Surge Battery Metals sponsored breakfast. My name is Jeff Clark of thegoldadvisor.com. If you don't know me, feel free to come up and say hi. I think everyone who invests in the sector is aware of the green energy revolution and how important battery metals are becoming in our society going forward. And that is a company this morning that is pursuing that very thing. So as investors, we don't maybe want to buy lithium itself. We want to invest in companies that are exploring and finding it, and that's where we're going to get our biggest bang. So we will take some Q&A at the end, but enjoy your breakfast while the chairman of Surge Battery Metals, Graham Harris, talks to us about his company. So Graham, come on up.
Hey, thank you, Jeff.
You don't need...
No, I don't need that because I've got this. So, yeah, you touched on a few things. First of all, thank you for coming. Thank you for being here this morning. I think, Rick Rule in his opening really nailed a few things for investors, because I want to keep this investor focused, because I'm here to explain what we're doing and educate you a little bit about the lithium market, but really, you're all here to try to make money, and I'm here to try to help you make money, and I'm going to present an opportunity that will allow you to make money. So if you pay attention and believe in what we're saying and believe in what we're doing, I think there's a great opportunity, because like Rick says, you want to look for companies that have been beat up in a downturn market. The lithium market has experienced a significant downturn in the last 2 years. I've been in this lithium market for about 10 years now. I've seen this before, just so you know. I founded a company called Millennial Lithium back in 2016. We had a great discovery in Argentina, and in 2018, nobody cared. You work so hard and you think you've done something great, and nobody cared. And then in 2022, 3 different companies came bidding for Millennial Lithium, and we sold it for $520 million. So this is nothing new. The market is cyclical, and the opportunity is because the market is cyclical. And right now, we have a big downturn in the market. I'll show you a few charts at the end. Some of these stocks are off 80%, some even more, but that's just the market. And I'm sure if you've been in, like Rick said, he was taking you all to your broker 2 years ago and pounding the table to buy uranium, and that had been in doldrums for 5 years. And look what now. If you listen to that, you'd be very well off. So the opportunity is again presenting itself, and it's presenting itself in the lithium market. So let's talk a little bit about lithium. Why lithium? Jeff, you touched on it. Whether we believe in the electric vehicle revolution or not really doesn't matter what I believe. I learned long ago when I was a broker not to tell the market what to do, but to listen to what the market is doing and what the market is telling me. And right now the government is telling me that we're mandating electric vehicles. The market, the public wants greener, cleaner energy through electric vehicles. And the car companies themselves are investing billions of dollars retooling to produce electric vehicles. Most of the new models that you'll see coming out of the car companies, the Toyotas, Volkswagens, Mercedes, you name it, they're all coming out, even Corvette, they're all coming out with an electric version of the car. And I do encourage you, I'm not sure how many people here drive an electric vehicle, but for those who do, 95% of those people who have an electric vehicle will never go back. They just drive great. They're really marvels of technology, and because of the low center of gravity due to the heavy weight of the battery, they drive fantastic. So I encourage you to buy an electric vehicle. So when we talk about electric vehicles, really what we're talking about are batteries and battery technology, because batteries are what drive the electric industry. And it's scary to know that 85% of the world's batteries are produced in China. Now that should alarm everybody here in America, because we've seen all this before. We've seen this in 1980 when the oil complex here in the US was stricken, and we had oil embargoes because we allowed our nation, the United States of America, to be beholden to OPEC because we didn't produce enough of our own oil. And that's what's happening now with China producing all the batteries. If we had some geopolitical event that occurred, it would stricken the economy here, the automobile industry, because we don't produce the batteries. So what we have to do is develop a domestic energy policy, just like we did in 1980, where we came out, we produced a domestic energy policy such that now America is self-reliant on its own oil and has an oil surplus. And this is what you're going to have to do and create in the battery industry. And you're doing it. Credit is where credit is due. You've come out with something called the Inflation Reduction Act. I'll just touch on that. We talked about China. We'll talk about the Inflation Reduction Act. The Inflation Reduction Act allows for rebates for cars as long as the cars are produced domestically, the batteries are produced domestically, and the raw materials that are in the batteries are sourced domestically. So in order for you to get your $7,500 rebate, we need those three things to happen. And right now, most of the cars aren't eligible for the full $7,500 rebate because most of the batteries are still made in China. Now that is all changing. We are undergoing a revolution here in the US. We're getting battery manufacturers in Minnesota, Georgia, Texas, Nevada. And these are all red states. Most of them are in red states. So I'm not too worried about a change in the government here in the US because I do think, yes, the Democrats pushed the Inflation Reduction Act, but as we all know, the Republicans are very anti-China. And there'll be a lot of tariffs slapped on these batteries and any other thing that comes out of China. So either way, I think the future looks pretty bright. And like I said before too, these jobs are great paying jobs and they're all in red states and the Republicans aren't going to lose sight of that. And when we've been to government in Washington, because there is a lot of government money available for this industry right now, they're all very cognizant of jobs. It's all about jobs, jobs, jobs. So we're pretty optimistic about the Inflation Reduction Act. And in fact, Nevada is establishing itself as an epicenter for lithium production and battery production, toes to nail, or nose, tail to nose. So they're really encouraging and fostering production, exploration, battery production, and manufacturing. So the future is pretty good for what we're doing here at Surge. Let me just go on. So we can talk about, we get a lot of negative press these days because, the press does like to jump on negative trends or positive trends to the degree that, are a little unrealistic. We've seen a lot of numbers coming out. Electric vehicle demand is slowing down. It's not slowing down. It's increasing at 25% compounded every year. What is happening is that the 50 or 70% expectations for growth are not being met. And then the headlines read, oh, electric vehicle demand slows down. Well, it's not. It's growing at 25% a year. And as that's growing at 25% a year, so will the demand for batteries, and so will the demand for the raw material that feeds those batteries. It's important to note, roughly 1 million tons of lithium demand is currently estimated for 2025. By 2035, that's going to be 4 million tons. By 2040, it's 7 million tons. So that's a lot of demand. And what happens here in this business, as you know from other commodity cycles, is because we have such low prices right now, a lot of projects aren't being funded. A lot of projects are stalled. And since you're at a Rick Rule conference, you all know a lot about mining. And you all know that when somebody says they're going to put a mine in production in 2028, it's just magically not going to reach its nameplate capacity in 2028. These things take time. They have growing pains. So all this demand that's continuing to be out there is going to be undersupplied again. And the same thing that happened in 2018 and 2018 to 2020 with the lithium price and the bottleneck that happened was there was a surge of demand to restock the lithium to supply the battery manufacturers, and the price went ballistic. Okay, and that's when my other company went ballistic. And I'm pretty confident, not that I'm an expert, but I'm pretty confident that this will happen again because I know that the underlying demand is going to continue to be there. So what we're doing here at Surge is just de-risking our project to the point where when the demand comes back and people are looking for a great opportunity in lithium, they will look at Surge battery metals. Now, I'm fortunate in that at Surge, when I sold that in 2022, what I realized was, geez, I should just go away and do nothing now, but what I realized what happened was it wasn't just the project that was important. It was the people and the team that I had assembled at Millennial Lithium that I didn't want to lose. Because unlike other commodities, gold, copper, there's a wealth of experience in the world. There are many people who've put a copper mine or a gold mine into production. Lithium is a relatively new industry, and there are not a lot of people who put a lithium mine into production. So I had an epiphany that I had a great team, and I didn't want to lose that team. I wanted to keep that team together because I knew that team had value. And so we spent the next year after we sold Millennial looking for another project. And lo and behold, the best project that we came across was in Northeast Nevada, called the Northeast Nevada project. It was in a company called Surge Battery Metals. My friend and CEO and president here, Greg Reimer, was with the company. And what they didn't have was lithium expertise. And what we had was lithium expertise. So we married the two last year. I brought in the team from Millennial. We took over the board, have joined Greg, and we're rapidly advancing the Nevada North project. And let me tell you one thing about the Nevada North project that I know that stood out and got us involved in the project. It is the highest grade lithium deposit, not only in the USA, but possibly the world. It is an excellent, excellent deposit. Since I've been there this year, we've grown, we've come out with our maiden resource. We're currently, and these are good catalysts. These are catalysts that should entice investors to get involved in the project because it's all part of the de-risking and valuation process. And these are the milestones that are coming up. We just completed some extra drilling. We're going to come out with a very significant increase in the resource come September. I can say that pretty confidently because with a clay deposit, it's a lot like coal, and there's a geophysical signature that we've mapped on the project. And with a great degree of accuracy, when we drill a hole into that clay signature, that clay horizon typically holds the high-grade lithium. And we announced a couple of weeks ago that we've intersected the same clay horizon that's been holding the high-grade lithium to date, further and further south, and we're going to extend that strike length by about 1 kilometer. And you can expect a pretty sizable increase in the resource, which was already a world-class resource, come September. That should be a good catalyst for all. And the other really important, the important thing we're working on right now is the PEA. That's your preliminary economic assessment. And initial indications and just common sense will tell you, as you know from mining, grade wins, okay? Grade always wins in mining. And because we have the highest grade deposit, we think our economics are going to reflect that. And we compare ourselves all the time to a company called Lithium Americas and their Thacker Pass deposit. Their Thacker Pass deposit is the signature deposit in Nevada. And that's the one that just secured $2.3 billion of DOE funding and a $600 million commitment from GM to build it out. So that's coming. It's scheduled to come on stream at 2028. And we know from the work that we've done to date, there are two clay projects that stand head and shoulders above all the other projects in the US and the rest of the world for that matter. It's Thacker Pass and Surge's Nevada North. And we're actually 30% higher grade than Thacker Pass. So I can tell you that I think we're better, but what I'm going to do is prove to you in the fall through the PEA that our project is better than that. And that gives us a lot of confidence to keep going, and we will get there to the point that we will be applying to the DOE for the funding as well, because that's what's available here in America. So I talked about tariffs. I did touch a little bit on Nevada's role. They really are pushing in Nevada to create this closed loop. Governor Lombardo committed to economic growth all the way. You know, we're fortunate enough that this project is in Nevada. Simple. And we talked about the Inflation Reduction Act. It's not only money for vehicles, it's also money for infrastructure, which is really important. Because everybody, you know, and I'm sure there's questions here and in the audience will talk about, you know, infrastructure. Where do I charge my car? The biggest drawback for electric vehicles is still probably range anxiety. Where do I plug in? How far will it go? And that's fair. Those are fair questions. But I can tell you, mankind is pretty ingenious to solve these issues. I remember many issues. I look at like computers in 1990. I'm sure you all remember you had to go take your Ethernet cable and plug in. And now we're all sitting here with a phone, 5G wireless. It's magic. And I think in the future, we'll have other innovative approaches. I think battery technology is getting better all the time. When I first started this in 2016, the Prius got 80 miles. Now cars are getting 500 miles. There's going to be a new battery coming out from Toyota called the solid-state battery in 2027. It's going to get you 700 miles, 1,000 kilometers. And all these advances in battery technology, what is really important to note, all the advances in battery technology since I've been involved in this industry have come as a result of the batteries consuming more lithium. Because of the properties of lithium sitting over here on the periodic table, it is a great store of energy. So the more lithium you can stuff in that battery, the more energy it can store, the greater your range. It's that simple. And to note, the solid-state battery that Toyota is coming out with in 2027 will consume 4 times the amount of lithium than batteries currently do. So I think it's fair to say and fair to speculate in the future that it's not advances in battery technology are going to do away with lithium. They're going to consume more. And again, that's great for us who are producing lithium. So let's talk a little bit about what's happened out there. This is the investment to meet the new source of supply and demand. We have Thacker Pass coming on at 80,000 tons, initially 40, going to 80. We're probably going to model that at 40, going to 80 as well. America needs 400,000 tons of lithium a year, estimated to be about 1 million by 2035. America produces 5,000 tons of lithium. It's mind-boggling. There is no lithium production in the US per se, or battery capability, but that's all changing. So what that tells me is we need 5 companies like ours to come on stream in the next 10 years. And there's only line of sight to maybe 3 or 4. Now there might be some other technologies that'll come on stream, maybe from the oil wells, the DLE technologies, the direct lithium extraction technologies that you might hear or read about. But to date, there is no DLE technology that's been proven to work at scale. So that's why we focus our projects on conventional technologies that we know will get the lithium out of the ground. We're using the same flow sheet as Thacker Pass. So we're not a science experiment. I don't want to take $1 billion of your dollars and come back and say, oh, sorry, didn't work. So we're using a flow sheet that we know is tried and true. It's the same one at Thacker Pass, and that's why we know this project will work. So we talked about China monopolizing the industry. We got to fix that, and we will fix that. Here's a couple charts. Proof is in the pudding. Albemarle, biggest lithium company in the world, was $300. All the analysts said it was a buy. Now it's 90. I see the analysts saying it's a sell, which is usually time to buy. So we've had a big decimation. In fact, just yesterday it hit a 4-year low as 2 analysts came out and downgraded the stock. Lithium Americas. I sold to them at $28. I was lucky because I took their paper, and luckily I sold their paper. But it's at an all-time low as well, $384. These are the wealth destructions that have occurred with the downturn in the lithium price. Lithium's gone from 8,000 to 20,000, back to 13,000, up to 80,000 when all these things were spiking, and now it's back down to about 12 to 13,000. And here's surge battery metals. Here I got involved last year. The market got excited as we put in an experienced management team. We had some great results that showed the market that this is the best lithium deposit in America. And we've also been suffering from the downtrend. And here we are at 36 cents, roughly a $50, $60 million market cap, down from 200. Remember, I sold Millennial for 500 million. My team thinks, and I believe, that this project is worth more than that was. It's a better project. It's a domestic project. The other one was Argentina. This is in America. And we think that this, at this point in time, represents excellent value, given where we are in our stage of development. So there's lots going on, lots of news to come. We're working hard, and with any turn at all in the lithium market, I've seen it before. You'll just wake up one day and these things will be off to the races again, just like happened with uranium. So the opportunity is now to investigate the lithium market and lithium stocks that you want to be involved in and that you have confidence in, and the confidence in the management and the project, and stake your claim. And when this turns, you'll be rewarded. So I'd like to open it up for any questions, please. Yes, sir.
Did the price collapse because the Chinese are dumping, or what was the...
It's actually almost the opposite.
Hey, Grant, repeat the question.
Okay. This gentleman is asking, did the price collapse because the Chinese are dumping? It's almost the opposite, counterintuitive. The price is collapsed because the Chinese brought on a lot of supply of lithium and then dumped the batteries. Okay, so then they're flooding the market with cheap batteries. And so they oversupplied a couple of years ago, and now they're getting rid of that inventory. Well, at some point, they're going to have to rebuild that inventory. And like I said, the demand for the electric vehicles didn't come out at 80% or whatever, and everybody's getting ready to pass on the batteries to all the car manufacturers, and it's just slowing down.
Will your cost of production be competitive with the Chinese?
That's a great question, Chris. Will our cost of production be competitive with the Chinese? No, because the Chinese don't have to use union labor. They don't pay taxes. They go to African countries to get their lithium. But what's important about that is it won't matter, because you're not going to be able to buy. You don't want to buy Chinese batteries. These are batteries that are going to have to be made in the US of A. So I think at some point, we're also probably going to get a domestic lithium price. And that's one of the issues with lithium in general, is there's no futures market. It's not like gold or copper where you can go to London Metals Exchange. You'll know what's going to trade in the future because there's a futures market. Lithium is contract pricing. It's not very transparent. Okay, so it's very difficult. Very small contracts can move the market or get reported that aren't really reflective of the actual market. So that's what we've had, and that's what's driving it down, and that's what everybody's waiting for. They're waiting for a restocking by the Chinese, and that'll create the demand again for lithium. And that's what's happened before in 2018 to 2020. And because the Chinese they understocked, that's what drove the price so high. And I'm hoping that doesn't happen again, because it's very difficult for investors, companies in general, when you have such volatile price swings. It's not realistic to go from 20,000 to 80,000 back to 13,000. It'd be nicer if it was just, the long-term benchmark for lithium pricing from people who are much smarter than I, like Benchmark Minerals, is around $24,000 a ton. And at $24,000 a ton, our project is very economic. As an example, Lithium America's OPEX is around 7,000. So when you get to 20, those are great margins. And like I alluded to earlier, I think our project will have better OPEX than Thacker Pass, because our grade is 30% higher. Yeah, and that's a good point. And our project is at surface. So that's one of the keys about this deposit. It's kind of an anomaly that our highest grade is at the surface. Normally these things leach and your higher grade is at the bottom. just like Thacker Pass says they're 2,800 ppm. Well, they're blending deeper ore with the surface ore to get to 2,800. Our surface ore is 4,000 ppm.
Hey, Graham,
Yes, sir.
over here, behind you.
Oh. It's tricky.
So tell us the difference between a lithium brine deposit versus a hard rock for those that don't know, which one you are and what advantage that offers you.
Okay, that's a great question. That's the basis of lithium. There are three sources of lithium in the world. There are brine projects. That was what my project was in Argentina, which is basically salty water, brine. There's hard rock, which is in spodumene and pegmatites, and that's basically found in Australia and Canada, and that's hard rock, and that's hard rock mining. And there are these clay deposits. There's one in Mexico. There are a few in China. The ones in China are very, very low grade, and those are the three. What the advantage of brine and clay deposits are is the spodumene deposits, the hard rock deposits, they end up producing what we call a concentrate. And then they have to ship that concentrate to China for upgrading. So they're not getting the lithium price that you see in the market. They're getting a much discounted price because they're not delivering a lithium carbonate. They deal and deliver a concentrate. So the advantages of the brines and the clays are that we can get to a battery-grade lithium carbonate product and extract premium pricing. So their mining costs on hard rock are much lower, but they're getting a much lower price, and it's a concentrate that has to be upgraded elsewhere. And Australia, by the way, is running into the same thing right now. They're going, why don't we have upgrading facilities in Australia? Why are we shipping all this stuff to China and being upgraded there, where it's great manufacturing jobs? So they're undergoing a self-awareness analysis as well, just like America, to bring those jobs back to Australia. So in a nutshell, we can get higher prices. We can get battery grade. And we have proven, if you look at some of our news releases, we have proven that we just produced technical grade from the clays, and we're now working on battery grade. And that's key, because battery grade is what the battery manufacturers are going to want, and that's going to get us the premium pricing.
And Graham, did I understand you right that you're going to have a resource update and a PEA later this fall?
Correct. Correct. We came out with our maiden resource in February of this year. It was substantial, 4.7 million tons of 2,800 ppm, including, I believe, 800,000 tons of over 4,000 ppm. We just completed our drilling program for the spring. As I alluded to earlier, we have intersected the same clay horizons that host the high-grade lithium in the drill holes to date. And so I expect shortly we'll be able to announce assay results, and then in September we'll put out an updated resource, but you can speculate it's going to grow by a minimum of 50% based on the analysis of the holes that we've seen and the strike length that we've stepped out to. So it's going to be rather significant. And I'm not telling anything that is inside information. We announced to the market that we did intersect these clay horizons, and it's just highly likely that these clay horizons will host the high-grade lithium like they have throughout the deposit. And then the PEA, sorry, just to touch on the PEA, we're working every day. We have calls every day on the PEA, and we're pushing really hard to get that out. It's going to depend on us being on time, which we are to date, to get the drilling done, because we need to incorporate the updated resource into the PEA. And we're on schedule to get that done. And that will be late November.
So is it fair to say you're becoming a little bit more of a developer than an explorer, or are you doing both?
Absolutely. Absolutely. We're working on our way to development. And after the PEA, the next level of exploration will be more drilling and working on the bankable feasibility study. And at that stage is when people pay attention. That's when people paid attention at Millennial Lithium. Once you have your bankable feasibility, that's when they'll come a knocking. And that's what we plan on seeing again.
So correct me if I'm wrong, and I don't mean to hog all the questions here. We got plenty of time for other questions, but it's a little quicker to go into production with a lithium deposit. Is that correct? So if so, how far away are you from some kind of production scenario?
Great question. I don't think it's any quicker. I mean, one of the advantages we have is we're in Nevada. Okay, so there is a tried and true process that if we follow, we will get there. It's like any mining. It's slow. It's government. You go, you get a permit. You want it yesterday. It might come in 2 weeks' time. But it's there to be had. As long as we cross all the I's and dot the T's or whatever, dot the T's, cross the I's, we will get there because there's a permitting process that's been laid out, and we're following the same permitting process that Thacker Pass has done in Nevada. So we expect bankable feasibility 2 years from now. Then you can apply for a mining permit, maybe by 2030. It's realistic production. Yes, sir? The question is, how do we extract lithium? It's a good question. With the brines, you used to just pump it up onto the surface, and you've seen all the ponds where you evaporation ponds, and then you put it through a chemical engineering process. What's important to note, and what I alluded to earlier, is the team, because lithium extraction is more a chemical engineering process than actual mining. Yes, you mine, but then you have a chemical engineering process. And in a nutshell, we're using the same flow sheet as Thacker Pass. So we'll dig it just conventionally, just dig the clay, deliver it, we'll sift it, we'll screen it, and we'll give it an acid bath. And then you'll end up with something like a brine. And then you'll run that through your chemical engineering process to produce the carbonate. In Nevada, right at the plant. It doesn't pay to ship this stuff anywhere. So like it's expensive to ship brine or whatever. I mean, that's why the Australians don't get the premium pricing, because it's expensive to ship the concentrate to China for upgrading. But here in America, that plant, our plant, will produce battery grade material at site in Nevada. Yes, these are not cheap. Estimate for Thacker Pass is 1.9 billion phase 1, 1.3 billion phase 2. 40 years. And you're talking about, for them, there's, I believe, a 7 billion MPV at a 22% IRR pre-tax. And I expect, like I've alluded to, ours would be better. Better.
Graham, question over here.
Yes, sir.
Hi. What is your exit strategy? Exit strategy.
Oh, I thought you said my next strategy. Well, I'll probably have a cup of tea. Have a cup of coffee, and then I'll, exit strategy? Well, it's a good question. I've got to be careful how I answer it, because you really don't want people to think you have an exit strategy, to be quite honest. You want to act like you can do it yourself. So this is what happened at Millennial. We have a dual process where we act like we can do it ourselves, because that's the only way to attract an M&A a buyer. And then, like I said, once we get to bankable feasibility, this asset will be significantly de-risked and be attractive to the bigger players in the market. Just like we de-risked the last one, and all of a sudden we had 3 bidders come out of the woodwork, because these assets make a heck of a lot of money in good pricing times. So we will act like we will do it ourselves, because that's the only way that you can convince people that they have to buy it, because if they think you can do it yourself, then they're going to buy you. If they don't think you can do it yourself, then they're going to leave you stranded. So we'll be developing a dual process. That's a whole new skill set too. And let's be honest. I mean, that's a new skill set too, to put these into production. It's not, development is one thing. We'd have to really change the team, bring in a lot of new people if we're going to go into development. And you know what? We are prepared to do that, if that's what has to be done.
There we go.
With lithium prices so volatile, that's going to make it a bit challenging for the DEA, for the feasibility study, for range of.
Yeah, we're going to use the same pricing that Lithium Americas did. It's $24,000 a ton over the life of the mine. So it's going to average out at that. It will fluctuate. But like I said, even at current pricing, around $14,000, we think our OPEX is going to come in quite a bit under Thacker, so it'd be around 6. There's still a good margin in there. So we're pretty confident this will go ahead. And I'm using pricing that's published by like Benchmark Minerals. Okay, so that's what's going to have to incorporate in the PEA. We just can't make up a price. We have to use industry pricing, and they're comfortable with that, and that's what Thacker's used in their PEA.
So you mentioned that you were also going to try to do the DOE funding.
Yes.
So what are their requirements for you to get funding?
Okay. The question was in regard to DOE funding. How did Thacker get $2.3 billion in DOE funding? The DOE funding is for above ground construction only. So we can't apply at this point in time, but when we have our feasibility and we're looking to go into production, that's when we can apply, because we can apply again for the construction phase. So that's what the DOE funding for. It's basically it's jobs. Jobs, jobs, jobs. So there are possible financial grants that could be had. We're looking at one next year for the pilot plant. Okay, so there's money there that's available. So as we go along here, we do have people working in Washington, accessing whatever grants might be available.
One more question. Is it truly, is it a positive or can it be a negative? Because it is.
To be what?
Can it be a true positive, or are there like some challenges because it is?
Government? Question is it positive or negative to have the government involved? It's extremely positive, because that money is available at T-bill rates. And it's not grant money, it's loan money. You have to pay it back. But it's at T-bill rates. And that greatly affects the economics positively. Because in a lot of situations in mining that everybody's been involved with before, when you're accessing capital for construction, it's 15% plus. This money is T-bill rate. It's a huge advantage. And not only that, but when you have that money, it's a lot easier to go to, let's say you're 500 million short. If you're backed by the 2.3 billion from the government, it's a lot easier to get the other 500 because they know that money's there. Just like a second mortgage, really. So no, it's a huge advantage.
Just worried about the regulations.
Yeah, well, the regulations, not really regulations. I mean, the policy's in place, the money's in place. Now we have to wait for the next round of Congress to allocate that money again to the Department of Energy that they can flow it through. So there's no other regulations per se. There's no extra regulations that are put in place just because it's government money. Any more? Share structure, great point. There's 165 million shares outstanding in this company. Management owns 20% on a fully diluted basis. Our larger investor is a company called American Lithium, who are also in Nevada, have a project in Nevada. They're NASDAQ listed. We have a lot of funds that are invested in the company, but we have a large retail base as well. We're listed on the Toronto Stock Exchange Venture, symbol NILI, and the OTCQB here in the US. And it's not one of these stocks that you have to make an appointment to buy a share. It's very liquid, and I think that's a good thing. You're welcome. So in summary, I just want to thank you all so much for listening and paying attention to this story. I really honestly feel like there's an opportunity here for the investor, and I think if you take advantage of that opportunity, next time I come here next year, we're going to be best friends.